So when I was in real estate, one of the things that people were buying real estate for was for the cash flow side of it. It's been ingrained philosophically into the minds of people that you must have an asset that is going to generate you a cash flow. You must do this. This is a must. And I blame a few different things. I blame obviously the conditioning that people have received through reading certain books that we all know about the importance of cash flow and the importance of having a flow of repeating income. I blame the way that the fiat system is set up, etc., etc. So yeah, there is a lot here that is conditioning, right? And we need to fight against that, because if you stay focused on that, you're always going to fall for the scams that have come around, like Celsius, like BlockFi, like FTX, like all these staking solutions that are out here offering these insane returns. Now, let's bear this in mind. Let's focus on exactly what we're doing here. You're taking an asset that has a 60 to 80% annual compound annual growth rate, right? And you're taking that and saying, I want to lodge it with someone else, give up all of my sovereign rights over that asset, give up, my ability to control my destiny because I control the asset. And I want to give that up because I'm going to make 65% a year. That's what you're doing, right? It's an extra 5%. It's at maximum. It's an extra 5%. Obviously, there were companies that were offering more than that, and then the reality hit in, and they had to offer less. I used this analogy, and I said, listen, if you're a real estate owner, and you've got to rent your apartment, and a realtor shows up, there's two guys that show up at the same time. They pull up. One guy pulls up in a Mercedes. The other guy pulls up in a beaten up old car. The guy in the Mercedes is well dressed, well presented, clean shaven, shakes your hand strongly, etc., etc. The guy in the beaten up car rolls out. One of his suit legs is stuck inside of his socks. It looks like he's been doing a little of the white stuff. His tie's all over the place, and he shakes your hand while you're shaking his hand. You don't even want to know what's been there, and his hand is now shaking while he's shaking yours. And then the guy in the suit says, the guy in the Mercedes, for example, says, I'm gonna get you $1,000 a month for this apartment. That's what I think this can get you. And the other guy shakes around, sniffs his nose, etc., etc., and then says, I think I can get you $1,050 a month. Which guy are you giving it to? Which guy are you trusting? One guy can get you more money, but that doesn't mean you're going to trust him because of the presentation that he's offered. He can get you a $50 a month more, but you're still going to go for the guy who pulled up in the Mercedes, knows how to speak, knows how to control himself, is presentable, and you can trust him. That person is trustworthy. Well, to me, that's what was coming up when the last cycle there was a lot of people talking about all these staking companies and stuff like that. They were pulling up in their beaten old cars, and they were trying to give me $1,050 a month when I was already getting 1,000. Right? No, I'm not going to trust you. Look at the layers of risk I've got for an extra $50 a month. That's why a lot of people fell for it, because they fell for the polluted idea that you need cash flow. The good news is Bitcoin is about to turn into a cash flow asset. A lot of people don't know this, but the way that an institution, and it might not turn into a cash flow asset for you, but the way that an institution, the way that people who understand markets, the way that institutions that understand markets will generate cash flow is not the normal way. They don't buy a house and then put it on the market and then get a tenant and then wait for that tenant to call them to change their fucking light bulbs, etc., etc., which is what I had to go through. That's why that was my last real estate story. So they don't do that, right? The way you generate cash flow on an asset that has been securitized is you go into the market and you use the derivatives markets to allow people to speculate on your assets in order to and you provide the underlying asset as a speculative tool, and they give you a premium for that. This is basically the idea of selling covered calls, right? So if I've got if I've got an asset, I can allow somebody, I can guarantee that asset for a certain period of time, and I can say that I'm going to sell this asset to them at a certain price or buy this asset from them at a certain price and give them a premium for it in order to do that. And 95% of the time, covered calls, the writers of covered calls win. That's how the market generates its cash flow, its underlying cash flow. Aims for 1% a month, 2% a month. You got 12 to 24% a year, and that's it. That's how the market, that's how institutional investors are generating cash flow. Even when an institutional investor wants to buy real estate, they're not out here like the average person trying to find a property deal and then acquire the property deal and then rent it out. That's not what's going on. They go buy a REIT, a real estate investment trust, on the open market, and then they start selling covered calls against it. So yeah, and the beautiful thing is that with Bitcoin, everyone thinks you cannot generate a cash flow, but the truth is that the cash flow is coming, because as soon as Bitcoin turns into an ETF, you'll have the derivatives market open up. So you'll now be able to generate a cash flow by selling options against your Bitcoin ETF position. So, and again, this is not for everyone to do. The point I'm making here is everyone thinks that Bitcoin doesn't cash flow. There's a bunch of real estate investors. There's two friends of mine who I've had conversations with, particularly in the last 2 or 3 days. One's name is Larry, and the other guy's name is Jared. And I know you're going to be watching this, so this is for you. Thank you for infuriating me enough. So the idea, and of course I'm being facetious, the idea of cash flow is a virus, because the normal person, this is why the normal person always gets screwed. The normal person believes you always need cash flow in an asset, and in essence, the cash flow is more important than the capital gain. That's a bunch of BS. That's a bunch of BS. If you're going to buy properties and the main target market of those properties is cash flow, not capital gains, then that's one business. The other business is, buying properties that are in prime areas that are going to have capital appreciation. And the properties that have had capital appreciation over the last 20 years have done so much better than those properties who were just relying on cash flow. Why? Because we live in an inflationary system. So the capital gain is more important than the cash flow, but everyone tells normal people that you got to focus on cash flow income. The reason why they do this is that it's basic marketing. You have a job, you need to escape your job. In order to escape your job, you get X number of properties, and those X number of properties will give you X amount of income, and now you're apparently free, even though you're driving all around the city, changing light bulbs, changing beds, painting, etc., etc. And they don't tell you the part where if you actually paid yourself a full salary rather than this dream that you have in your head, your property business would be at a negative, right? They don't tell you that part. Because it's easier to sell the dream of a cash flow than to sell the dream of basically that you don't have the dream, right? You're telling someone, hey, you don't really have the dream. What you have is a job. It's basically a job. You left the job to have a job, but they don't tell anybody that, because at the end of the day, you got to sell the dream. You got to sell them the dream, right? And so everyone thinks cash flow is important. Bitcoin doesn't cash flow, therefore I don't want to get into Bitcoin because it doesn't cash flow. The truth is Bitcoin is becoming a cash flow asset. The second the ETF comes out, we might not be able to do it right now with raw, quote unquote physical bearer Bitcoin, because the markets are not there. But soon enough, the markets will be there, because as soon as the ETF comes out, the derivatives markets will open up, and then people will see how much potential there is in the derivatives markets to allow the options traders to come in and out and generate a cash flow. And institutions, and not ETFs, institutions that get into Bitcoin, and big players will be doing this with Bitcoin. ETFs can't do this. And so what they'll do is they'll buy a bunch of Bitcoin ETF, and then they'll write covered calls against it. They'll get the capital appreciation on the ETF, and they'll get the income from the derivatives as well. Much safer way of doing it, because the market is the one that's at on the other side of it, not someone like BlockFi, Celsius, etc., or FTX, right? So there is someone that can't overextend. You got the full wisdom of the market involved, And that's how you generate your cash flow. The second that a Bitcoin ETF comes out, it turns into a positive cash flow generating asset. Again, maybe not for you, but for the sophisticated investor, for someone who knows how to use markets to generate cash flow, it immediately turns into a cash flow generating asset. Now, what does that do, right? Let's look at real estate, because that's the main enemy here. And again, it's not an enemy, it's just an alternative. The problem is, I was having this conversation with one of the friends that I mentioned, and he said, I don't really see Bitcoin as an alternative to real estate. It's more of an alternative to gold. And I said, this is the biggest lie that Wall Street has come out with, because Bitcoin's main target is real estate, not gold, right? It's not even an argument to discuss whether Bitcoin is better than gold. The real argument and the real conversation, any conversation I speak to with anyone who's worth over $1 million, the conversation is always Bitcoin versus real estate. So in fact, and especially after my conversation with my friend Larry, I am going to spend the next entire week dismantling the idea that Bitcoin is not comparable to real estate. We're going to spend every single video almost that comes out in the next week is strictly going to be focused on the conversation that will happen, I believe, in the next cycle, in the 2028 cycle. But I'm going to have it right now here with you. I think I've given you enough to make you realize that Bitcoin's better than gold. Now I'm going to focus on real estate. And I want everyone in the comments to thank Larry, because Larry infuriated me enough to actually get this conversation finally done and out there. So everyone in the comments, I want you to thank Larry, okay? And Larry's in the comments too, so I'm sure he'll see it. So the point here is that Bitcoin, the alternative investment to Bitcoin for the type of person that I'm trying to talk to, my parents, your parents, the immigrants who came into the United Kingdom, who did the right thing for 35 or 40 years to try and build a legacy for their two sons. They sacrificed, they built a property portfolio, etc., etc., and then only to find out that their property portfolio needs to be worth 50 to 80% more than it is in order to keep up with the amount of money printing that's been going on. That is who I'm speaking to. And that market has most of its wealth, all the way up to like $30 million net worth, most of its wealth in real estate. So we're going to have this real estate conversation, which is why I need you to subscribe. I want you to subscribe so you don't miss this conversation that's going to happen over the next week. It's going to be fun. And I'm going to sit here and I'm going to basically assassinate every single idea around why Bitcoin cannot be a comparable investment to real estate, and what the future prospects are of real estate versus Bitcoin, and Bitcoin versus real estate, and where the risks are, right? Because there are certain risks. Real estate might be better in certain situations. So we're going to analyze all of that, and that's going to happen over the next week, which is why I need you to subscribe to the channel, share the videos so that other people understand that Bitcoin is a competitor to the wealth that is in real estate, not the other way around, and not in any other direction. At the end of the day, our jobs as capital allocators is to look at particular assets and say, is that bucket better than this bucket, right? So if you've got $100,000 or whatever it is, you're now looking at the market going, do I put it into gold, equities, or real estate? And now another bucket has shown up called Bitcoin, presenting itself to be the best one out there. You don't really understand it, but so of course you're going to say, yeah, maybe I'll stick to the real estate because that's what everyone else does. Gold has been eradicated, right? Not many people are allocating to gold anymore. No new money is going into gold anymore, so that's been taken care of. It's really equities, real estate, and Bitcoin that we need to focus on. And for the next week, I'm going to focus on real estate and Bitcoin. But I have a real estate background, so I know all of the pitfalls. And the best argument for real estate up until now has been cash flow. And here's what's going to happen, by the way. If you believe that people got into real estate in order for the cash flow side of it, and that's why the asset appreciated, what the hell do you think is going to happen when people realize that institutions realize that they can cash flow their Bitcoin using derivatives because now there's an ETF? They don't need to worry about the geographical risk of buying properties in Orlando. They don't need to worry about the geographical risks of buying their properties in Miami. They don't need to worry about any government issue risk or any future interest risk. Like, people just don't want to move to Miami anymore, right? That could happen. That could happen. The only reason the prices went up is because people wanted to move there. What if LA tomorrow turns around and says, right, we've just come to our senses, our state taxes are going down to zero, and we want people to come back? What happens to your Miami real estate that you're buying right now? Right? All of these are hedges that you've got to make in your mind to analyze which bucket do I put my wealth into. And so for the next week, I'm going to sit here and analyze it with real estate. And the first point I wanted to make is this idea that that Bitcoin is not a cash flow generating asset. And up till now, people have been right. But you cannot look at your investments and say, I'm just going to do this today, and then if tomorrow I'm going to shift. You have to analyze the future, and that's what's going on here. And Bitcoin becomes a cash flow generating asset the second an ETF comes out, because you can finally use the derivatives products that are out in the market. You don't need to trust no one. You don't need to trust BlockFi. You don't need to trust Celsius. You don't need to trust FTX. You can just trust the function of the market that has been around for hundreds of years. And that is the way that institutions will generate a cash flow through Bitcoin. They will be selling covered calls on their Bitcoin. And imagine once they realize, instead of buying real estate or real estate investment trusts or whatever else, I can buy the Bitcoin ETF. Yeah, I've got the volatility on the Bitcoin on the ETF, but I can still generate my 1 to 2% a month cash flow, 12 to 24% a year in cash flow, plus the asset over a long enough time period is CAGRing at 50 to 80%. Now all this institutional money starts going, wait a second, Bitcoin's the best cash flow generating asset. And I also don't need to worry about geographical risk. I don't need to worry about maintaining that property. I don't need to worry about any carry costs of owning that property. I don't need to worry about local taxes, nothing. All I got to do is buy the Bitcoin ETF, sell the covered calls against it. I got my 12 to 24%. I got the Bitcoin compounding at 50 to 80% on an annual basis. Bitcoin is going to take over real estate as the best cash flow generating asset out there, so that real estate can finally go back to being what it is, which is a utility for people to live in, rather than being this bastardized version of a securitized asset that people need to buy because it's one of the hardest things. It's one of the hardest assets that we've artificially created. Do you think that if we had permits to just build anywhere, we would have a housing shortage? Of course not. We'd probably also innovate more in a way to get people from one place to another. But we don't do that. We have permits, we have regulators, we have people in place to constrain the supply of housing in order to keep the prices up, so that we can print enough money, and so that printed money can lock into property and stay in the country. Now, despite all of this, there are still only 3 rules to Bitcoin. But before I go to the 3 rules to Bitcoin, please subscribe. This conversation is going to be essential, because the market, the message that I'm talking about now is directly hitting the message of the market where I started my YouTube channel, which is for my parents. Bitcoin is better than real estate, and I'm going to spend the next week talking about why it is and answering every single question that you have as to why it is. So please subscribe to the channel. Please send and share these videos out to the people that you know need to hear this message the most. And despite all of that, there's still only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.